comic, I'm starting fires through poetry. The heart's out, staying loyal, no falling out. And if you step into the court, be ready, we ballin' out, yeah. I just gotta go hard. Go hard, go hard, go hard.
Hello, everybody, and welcome to another edition of iGaming Next Weekly News Live. We're sorry to have missed you last week, but we are back with a bang this week for sure. And joining me today on the stream is Mr. Connor Mulher. How are you doing?
I'm doing very well, thank you, Jake. I'm pleased to see that Nico and Elizabeth, our marketing gurus at iGaming Next, were obviously fed up of being outdone on the best song when it comes to the intro for weekly news, because our new New York advert is absolutely popping. Is that what the kids call hip hop, Jake? I'm not sure, but it was fantastic. It certainly gets me in the mood for a big conference. But of course, Playson seeing us in there with their funky little tune as well. We should, of course, say thank you to our sponsors, Playson and YOLO Group, who keep us coming back week in and week out. But yes, I'm doing very well. Thank you for asking. We are staring down the barrel of a bank holiday weekend here in the UK. What have you got planned, Jake? Anything exciting?
Yeah, that's true. It's a public holiday on Monday, and it's come along at the right time, I think, as we are getting towards the end of a long, hard slog of a reporting season. And
yeah, you've been 2 weeks off this month, you poor thing.
Exactly. That makes coming back to work all the more difficult, Connie. You should know that. I'm not in the routine. But no, to answer your question, I'm going to the Lake District on Sunday. It is my wife's sister's birthday, so we're going to celebrate with a barbecue up in the lakes. What are you up to? Have you got any plans?
Yeah, I thought we got quite a similar plan, actually. I'm going to Sheffield tomorrow with my girlfriend. I know. Sorry, ladies. And we're going to see her, visit her family. We have, what are we doing on Saturday? I think we're going to visit a country estate or something in the north. And then we're doing like a bottomless drinks thing followed by karaoke. So I've been training my voice all week. Trying to keep
that
it.
That sounds awesome. What are you going to sing?
Barry Manilow, Copacabana, top of the list. That's my number one go-to, but I have been working on the set list. There's a few bits and pieces in there, Jake. Bit of Steelers Wheel.
Great tune. Is that just in case you call back for an encore?
Depends how gruff the voice gets, because I might try some Bill Withers. If I can get the depth, I might try, Bill Withers. And who else? Bit of Paul Simon on there. Yeah, looking forward to it. And then Sunday, we've got a walk out in the countryside, I think. I wonder if we might be going to the Peak District for a walk. Maybe I'll see you there.
Yeah, sounds incredibly wholesome.
Pub lunch. And then I'm meeting my dad, and then I'm meeting my mum on the Monday. So we don't get arrested this weekend, Connor. Ross, what do you take me for? Get arrested? Only my singing could be considered criminal, but we'll be in a closed environment, so I don't think we'll be in any danger there. So yeah, looking forward to it, Jake. I'll be back here on Monday evening.
Good. Glad to hear it. And thank you for that comment, Ross. And thank you for showing everybody else that the comments are open. So if you do want to get involved with the discussion, maybe suggest some songs for Connor to sing at karaoke over the weekend, then please do comment on the stream as we go. And apologies as well. We're both in dire need of a haircut, as we were saying off air. So you work on it, don't lie.
I apologise for these luscious locks. You're out of order, mate. Don't jealousy will get you nowhere, pal.
Get a hat on that. Anyway, right, we should probably talk about some gambling news, Connor. I think we probably should. Yeah, that's what the viewers have come to expect. And like I said, we're getting towards the end of a reporting season for Q2. There is some light at the end of the tunnel, I think. But this week it was the turn of the affiliates, namely Better Collective and Catena Media, whose Q2 results ended in kind of entirely contrasting fortunes, I think you'd probably say. We're going to take a closer look at both of those now, starting with Better Collective, which posted its best ever Q2 results this week. So, Connor, do you want to give us a short kind of earnings breakdown, and then we can jump on to some of the kind of major talking points from the report?
Absolutely, mate. Yeah, as you say, it was the best ever Q2, not the best ever quarter quite, but not far off. Best ever Q2 for Better Collective, who really are off to the races, if you'll pardon the expression. So their revenue came in at 78 million euros for the quarter, which I think is really strong for an affiliate business. It's probably makes it the highest earning gambling affiliate group across all the big ones that we know. That revenue is up 39% year on year, so really solid growth there. And the way that Better Collective reports that, they kind of break it down into two segments, which is the publishing and media division. The publishing division, which is obviously all of its own websites, and also any adverts that it runs through kind of media partnerships with other media brands. That segment was responsible for about 2/3 of the revenue, 53.5 million euros, as it saw a growth rate of 40% year on year. And then the other segment is the paid media segment, which is all about pay-per-click advertising on Google and Bing and all the rest of it, as well as advertising on third-party media that's paid media. That brought in another 24.6 million euros and was up 37% year on year. So across both of those divisions, growth is up 40%, which is really amazing. And one of the key figures for Better Collective is this figure of recurring revenue, because we want to know how much, of this revenue we can count on coming back in future quarters. And of the total 78 million, 46 million was considered recurring revenue, which is an increase of about 67% year on year. So very impressive. I wonder if it's worth us having a look. I think we've got a graph somewhere in the background we can probably bring up that just shows a visual representation of that growth. So if Elizabeth could bring that up on the screen for us, there you have it. So you can see massive jump in revenue, massive jump in recurring revenue. EBITDA is up to just under 30 million. And profit after tax is up modestly to about 8 million euros. Thank you, Elizabeth. And just to mention, sorry, I know I do have a tendency to drag on, but just to mention quickly that about 70% of the revenue came from Europe and the rest of the world, and about 30% came from North America. What was quite impressive as well, I think, so they generated about 23 million in revenue in North America, and that was up 60% year on year. So pretty rapid growth in the US and Canada.
Yeah, it makes sense to point that out, Connor, and I think we'll come back to that North American revenue as well when we go on to talk about Catena Media in a little while. But new depositing customers as well, which is a key KPI for any affiliate, totaled more than 500,000 in Q2, and that was year-on-year growth of 32%. So, yeah, pretty good figures across the board for Better Collective, who just sort of ploughing on pretty relentlessly in recent quarters. And they also called out a couple of acquisitions, didn't they, Connor? So as well as organic growth and recurring revenue, they put quite a lot of the performance down to acquisitions. And not all of those acquisitions have been kind of conventional affiliate assets either.
Yeah, it's a bit of a combination of things. I think Better Collective is sort of expanding in various different directions, so it's got a sort of dual strategy of buying up established brands, of course, which can always be very useful just to expand that presence in certain markets and in certain verticals, but also these kind of technical acquisitions like SkyCon and like Playmaker HQ, which kind of bolster their capabilities when it comes to so SkyCon is helping out with the paid media segment and helping to improve margins there. As you might expect, margins in the paid media segment tend to be lower than in the publishing segment. So I think the point of that SkyCon deal, which I think was a £45 million deal, something like that, pretty significant. That was all about kind of contributing towards that paid media growth. And then you have Playmaker HQ, which is also intended to help expand their social media capabilities. And then on the other side of the coin, you have acquisitions like Footbin. Is that right? I don't know.
Yeah, Footbin, yeah.
About the esports FIFA online thing. You know,
I know it well. So that stands for FIFA Ultimate Team Buy It Now. And it's basically a database of every player on the FIFA video game and exactly how much they cost at that moment in time. So you can weigh up how much each of their little trading cards costs and whether you can basically afford it with the amount of virtual coins that you have in your account. There you go.
Well, that sounds, if you don't mind me saying, just astonishingly boring to me, but each to their own. There's no accounting for taste. And then the other assets that they had, apart from Footbin, they had 4 Swedish-facing brands that they bought from a company called, I can't remember, and they are kind of Swedish-facing online gambling affiliate portals, I believe.
Every sport group, I think it was. Yeah.
Every sport group, yes, and they picked them up for a pretty modest few million euros, with a view to expanding their presence in Sweden. So that's what I would call the dual acquisition strategy here. We're improving margins, improving the back end, improving out their capabilities, and then expanding the list of brands that exist under the Better Collective umbrella. So I would suggest that Better Collective's mission statement of becoming the leading global sports media thing is kind of a powerful statement, really, and I think it's helping them, by focusing on that as a kind of future goal. I think it's really helping them to just keep on expanding in the right direction. And they also go ahead.
We've seen kind of how important acquisitions are for businesses right across the gambling sphere, and getting them right can be incredibly significant, as we've seen with Better Collective and the Action Network, for example, which is probably the strongest asset in the US sports betting sector. They paid a huge price for it. I seem to remember $240 million or something like that, which was crazy money at the time for an affiliate asset. But that's obviously, that's proven to be the right move. And when we move on to Catena, we'll probably talk about some other acquisitions that maybe haven't fared quite as well. But I know, Connor, you tuned into their earnings call as well, and their CFO was giving some comments about M&A. Can we expect more kind of M&A in this vein in the future?
Yeah, I think it would be really sensible to keep that in mind. I think at the moment, with things the way they are, it's probably kind of the macroeconomic climate probably puts Better Collective in a favourable position, actually. As you say, the CFO, Flemming Pedersen, pointed out that they've got 150 million euros worth of financial capacity. So he said we have plenty of firepower for expanding our activities on that call the other day. And one of the things that was mentioned was artificial intelligence, of course. There's no escaping it. Yes. And Better Collective suggested that actually already AI has had a major impact on the way that it does business, the way that it creates, distributes, and consumes content. And it empowers the business to scale content production efficiently, maintaining a consistent flow of high-quality materials across our sports brands. So it's obviously quite bullish on AI technology, and especially when it comes to the publishing sector, which I think is fair enough, although I'm loath to admit it. I don't like using ChatGPT, as you know, but that's just me. Yeah, so I think tech acquisitions in the near future are probably a pretty safe bet.
Yeah, I think those comments on AI were probably the most interesting takeaway for me, because it looks increasingly like content is the most kind of real life use case we have for AI at the moment, and ChatGPT, and especially kind of affiliate content, or if you're an operator, sort of product descriptions, things like that. All these things that would have required some kind of specific knowledge set now can just be delegated to AI. I think, well, we're working on a story at the moment about Game Lounge as well, the affiliate, having made quite a few redundancies across its content team. They're not the first company to do that. And I do think that AI is having kind of increasing influence in that, because, so many companies are outsourcing and realizing it's a lot cheaper than hiring staff to do a similar job. I do think we're slightly protected from that in our line of work, Connor, which is obviously a good thing. Almost certainly, or that's what they tell me anyway, and I'll choose to believe it. But yeah, that was definitely interesting for me. Like you say, revolutionise the way we create, distribute, and consume content. So they're extremely bullish on the use of AI in the affiliate space, and their strong Q2 performance, as we discussed, has seen them kind of reiterate their recently upgraded earnings guidance for the full year, which I think is somewhere between 305 million and 315 million, with EBITDA.
No, it's gone up even since then. It's 315 to 325 now. So that was upgraded in June. Yeah, before June it was 305, 315. But yeah, nice. Up to 325 million in revenue. EBITDA between 105 and 115 million. Given the post-quarter end update that they gave us about July, which showed monthly revenue of 23 million, up 39% year on year, it sounds like they're probably on track for that.
Yep, and investors were pleased with the performance. I think you said the share price went up by around 9%. Again, we can compare that to Catena shortly. But yeah, good performance all round. And as always, if you're watching along in the stream, you can scan the QR code at the top left there, and that'll take you to the story if you want to take a closer look at the numbers in a bit more detail. Okay, I think we should probably do a similar analysis now, but for Catena Media, which over the last sort of decade, you would say has been Better Collective's closest competitor in the affiliate space. That gap has kind of widened recently, and I think that shows again in these financial results. So, Connor, are you okay to give us kind of the top line numbers again for Catena?
I can, yes. So while Better Collective was up nearly 40% revenue, Catena revenue fell by 16%. That's not something anyone likes to see. Revenue going the wrong way. So the revenue was down to a fairly modest 16.9 million euros. So not the best performance ever for Catena. Adjusted EBITDA came to 2.6 million from that, which was down a whopping 60% year on year. So really disappointing, I think, for a lot of investors and shareholders. So the kind of reason for that massive decrease in the EBITDA was not only the drop in revenue, but also there was a reduction in the EBITDA margin, just down to 15%, which was 32% in the prior year. So pretty big drop off there, unfortunately. And I think we've got another graph here, just a very simple one, just to show these kind of slightly lackluster results, I'm afraid. Little drop off in revenue and a big drop off for adjusted EBITDA. So quite disappointing. Thank you, Elizabeth, for that. I think the reduction was driven probably by the fact that new depositing customers were down by 31%. Revenue in North America was down 16% to 12.5 million, but that still makes up the biggest part of
So let's pause on that for a moment, because that's half the revenue that Better Collective generated from North America in the same period.
Yeah.
But as we know, Catena is kind of putting all of its eggs in the US basket, isn't it? We've written a story this month about them basically selling off UK and Australian business assets to Moneta Communications, which is another UK affiliate. As part of the strategic review, Catena's seen fit to kind of focus solely on North America.
We still have these operations in Japan. I know they were kind of the biggest player in Japan for a second now. I wonder if that's
I think they must do.
Yeah.
But yeah, I mean, if if your strategy is to throw all of your resources into one market and that market is declining and you're struggling to keep pace with competitors that are more diversified, then something's probably gone wrong somewhere. Did they provide any color on the US during the earnings call or anything this week, Connor?
Well, what we had some comments from Michael Dyer, the CEO, and he suggested that the performance and the reduction in revenue reflected the backdrop. This is a quote now: reflected the backdrop of reduced marketing spend by betting operators in North America. This market-wide tightening temporarily dampened search volume and levels of new depositing customers, particularly in sports. In addition to that, Q2 is a pretty quiet period for sports generally, which I think is fair enough. But it does strike me as an odd. It strikes me as not exactly a complete explanation, to be honest. I think that I get that. Okay, if more operators are advertising on television, for example, then more customers would go and search them online, and then maybe they'll check reviews on a comparison site before. So I get how US operators' marketing spend might impact the affiliate, but I also think it sounds a bit like an excuse to me anyway, because the point of affiliates is that you can do that marketing for the operators without them spending money where it's got no return. So it's only going to cost the operators when customers are referred, and that kind of is the whole point of the sector. So it strikes me as a little bit of a get out, personally. What do you think?
Yeah, I'm minded to agree, and I think his comments were interesting. He said there's stronger competition from obviously companies like Better Collective, Gambling.com Group, but also non-traditional affiliates, and that's only going to increase through the entry of kind of established media brands into the online sports betting space. So if you take Penn Entertainment, for example, has just done a massive deal with ESPN, sub-licensing deal to launch ESPN Bet. They've now all of a sudden got access to the entire ESPN media portfolio to basically advertise on and to try and acquire customers from. So if they've got that already at their disposal and have paid, I can't remember what it was, 150 million a year or whatever it was to get access to that, they're a lot less likely to prioritize affiliate marketing because they've got a stream there that's ready made. And I think that trend is likely to continue. We saw Penn do it as well previously, didn't we, with Barstool, where they kind of eschewed traditional affiliate marketing because they thought they had a really low cost model to acquire customers through Barstool's kind of podcast audience. They weren't the greatest demographic, as we realize now, because they were probably too young with not enough disposable income. But you would think that the ESPN audience is probably slightly stronger from that point. But
yeah, we're going off topic slightly, but I think that the Barstool thing, they kind of just hit a ceiling with that really quickly in terms of the actual potential for customer acquisition, because it was a limited, might have been a highly engaged audience, but it's always still limited. And I think, I suspect ultimately as well, it doesn't really matter how much you engage with a media brand if the product isn't right. And if you're a keen bettor, then product and odds really are always going to win that battle. So let's hope that Penn's product that it's going to launch with ESPN has the right functionality, I suppose, because they've got to get that right as well.
Yeah. But I mean, that was just one example. You know, we're likely to see the same thing with Fanatics. With with their database, they're unlikely to rely heavily on affiliates. And we've also written a lot in recent weeks, well, months, I should say, most of this year, how US operators need to move away from acquisition and with a higher focus on retention, and affiliates kind of move down the pecking order as a result of that, probably in their list of priorities.
Yeah. One of the things that Better Collective, I think, has really got right is that recurring revenue. And I think that's because they've really shifted very heavily in recent years towards revenue share models over cost per acquisition. So, even if the affiliate in the US begins to decline in importance, I think once you've done the groundwork and sent those customers over, you get that recurring revenue coming in regardless. So that's a pretty smart strategy for me. But yeah, it just struck me as odd that Michael Daly kind of suggested all these external wider market factors for why their revenue is down, and yet Better Collective's operating in the same context, and their US revenue is up 60%. So I think there's a direct competitor thing going on there, where actually someone's eating someone else's lunch, so to speak.
And we talked about Better Collective's long-term earnings guidance, and so we should do the same for Catena. And they've set a 2025 target of reaching $125 million in revenue. And Oscar Ronquist from ABG Sundal pointed out that they've got a pretty long way to go from the current growth rate. But Michael Daly, again, he was bullish. He said we set that target as it's both achievable and challenging because that's our belief as a business. And that figure includes kind of new state launches, but ones that have been well publicized already. So North Carolina, for example, from 2024. And speaking of North Carolina, we saw another affiliate story this week as XL Media struck a new kind of media deal with local media partners as they're getting into position ready for when that state goes live with online sports betting. But yeah, there was another quote from Michael Daly that I'm looking for. Oh yeah, here. So he was asked about those targets once again, and the increased competition and what effect that is likely to have. He said, does that keep us from meeting our financial goals? Absolutely not. So I think analysts will be keeping a close eye on that 2025 target, as he's obviously said now that they're definitely going to be able to meet that. So yeah, the proof will be in the pudding, I guess.
Yeah, absolutely. I think the danger is that once you start declining, it really is time to turn that around, isn't it? Because as the growth rate of Better Collective compared to Catena is just astonishing, really. And I think we've got a pretty neat visual representation of that when it comes to the two companies' share prices. I don't know if we can get the 6-month share price comparison up on the screen so that you can see, but it shows so clearly the kind of opposing fortunes of these two businesses. Better Collective's just absolutely through the roof, up 40% over the past 6 months, and Catena Media's down more than 40% over the last 6 months, which reflects what's been going on within both of those businesses and the results that they've been posting. I think if we can go back even further, we have a 5-year comparison, and I think that's worth looking at because there's a kind of point here, maybe around 2019, 2020, where the two businesses are pretty much neck and neck.
Yeah.
And then between 2021 and 2022, you kind of see a similar pattern. You see them both declining towards the end of 2022. The difference is Better Collective's really turned it around and gone straight back up again this year. And just performing super, super strongly. Thank you for showing that, Elizabeth. I think that really reflects, investor confidence in the businesses and how they kind of differ quite strongly.
Yeah, great data viz there. Thank you for organising that for us, Connor. And a microcosm of that was was again reflected after Q2. I think it said Better Collective shares went up 9% on the results, and Catena's fell by more than 20%. So, those trends look set to continue.
So must be really fun being a day trader in gambling, because these stocks are so volatile. Do you know what I mean? Dropping 20% just like that. It's just crazy. But there you go. That's the gambling sector for you.
Yeah, exactly. That's why it's so fun to cover, Connor. That's why we have so much fun covering these Q2 results.
Live and breathe results, mate.
Yeah, exactly. Okay, well, we've done half an hour on that. That was our aim today. So I think we'll draw a line under it there. You didn't get any karaoke recommendations, I'm afraid, Connor. So best to stick with what you know and the Simon and Garfunkel.
No, I think we've had a bit of trouble with our chat functionality. Either that, or we've only had one comment the whole episode, and it's from a colleague, which would actually be really sad if you ask me, Jake. I hope there's a few people who've had their own conversation on the side, because we unfortunately can't see your comments today. So just rest assured, if you have commented, we're not ignoring you. We just had a little technical difficulty on our end and we can't see them. But no, it's okay. Yeah, exactly. I've got my karaoke set list ready, and I've got absolutely no doubts about it. I'm going to knock them dead.
I'm sure you will. And we'll get the LinkedIn chat fixed for next week for sure. So please do join us again then, where we'll have highlights of Connor's rendition of Steelers Wheel Stuck in the Middle with You. That should get the viewers up by an extra 100 or 200, I'd imagine. You can't miss that.
There you go, Jake. Once again, thanks to Playson to the left of me, YOLO to the right. Jake, as always, here I am stuck in the middle with you, and what a pleasure it's been.
Yep. Thank you very much for joining me today, Connor. And thanks for everybody else that tuned in. Have a great long weekend if you're in the UK. And if not, we'll see you next week. Bye-bye.
That's right. Take care, everyone.